Hi guys, welcome to my short video on, I just want to speak briefly about moving averages. Now, as you guys know and you're aware of, I only use the 50 EMA. Now, I use the 50 EMA for a number of reasons on the weekly, the daily, the 4 hour, the sort of the hourly and the 15 minute. I don't use it on the 2 hour or the 30 minute or anything like that. It's just the weekly, daily, 4 hour, hourly and 15 minute. Now, I use it for, in multiple different ways. I've never really liked the moving average crossover strategy where you kind of use two EMAs together because I find that it lags behind price. So therefore, by the time that they squeeze together and you get the snap, it's it's already happened. The move's already happened. So this is why I just like using one EMA. Now I use the 50 EMA most importantly for dynamic support and resistance. So generally when price is kind of like just falling out of the sky, you'll normally get it where it does at least respect the 1 hour 50 EMA. If it breaks this, then it will go to generally the 4 hour 50 EMA. So I use it as a dynamic support and resistance, and I also use it as a really strong layer of confluence around other layers of confluences. So generally speaking, on its own, like with every other technical tool, it means nothing. But with other things, so for example, if it's within alignment with a fib level, previous market structure, all that kind of stuff, then obviously it makes sense. But by itself, it means very little. Now you can also use it as a break and a retest strategy. So you can almost see it when it breaks the 1 hour 50 EMA. You can look for that retest on the smaller time frames. Or if it breaks the 4 hour 50 EMA, you can also look for the retest on the hourly. So a very similar situation happened here with gold, where I'm going to show you a quick example of this. Now, I'm not saying it's always accurate, but it's just something you should look out for because it works really well if maybe you've missed your first entry and then therefore you're looking for, to get in on the trade, or if you're looking to basically add a secondary or a third position to your existing trade. Now, a lot of people say to me, I've missed the trade, like it's missed, it's gone without me. But, as long as the risk to reward is still present, there's many opportunities to still scale in on a smaller time frame and find additional ways to either get back into the position or add positions to the existing position. Now, this is a fine example of gold. We had this leg here from sort of 1324 region, and we sort of fibbed it once price showed us that it stopped down to the sort of 1280, and then therefore we are anticipating the 61.8. Now there's a number of reasons why we're anticipating this. Also because we had this descending trend line from this point, and I have actually broken down this pair in one of the market breakdowns. So we had this third touch of a trend line too. So we were anticipating to actually sell gold from these levels when it started to approach sort of 1307, 1308, and there's some other reasons as well. So for example, it's correlated with silver. Silver had actually done this move before gold, so therefore that gave us the signal. So we could have even come off the 4 hour, but as I suggest in all my videos, never to come off the 4 hour. We've already identified this as an area of interest. There's no need to come off the 4 hour. We can go down to the hourly or even the 15 minute. Now, if you'd missed this first entry, as you can see on the 4 hour time frame, it pretty much just tanked. It just fell off. Now we had three, huge 4 hour candles. There was really no opportunity to get in on this if we were going off the 4 hour time frame. But what you can see is here is you had your 4 hour 50 EMA here. Now, the moment this candlestick closed below the 4 hour, what you could have done is marked the 4 hour. Now, the reason why you have to mark it is because when you then go down to the hourly to look for the retest, you're not going to see the 4 hour 50 EMA anymore. You're going to obviously see the hour 50 EMA. So therefore you have to just mark it, put a little line and mark it where it's broken at. And then what you do is you scale down to the hourly, and you can see here, look, that we've marked the 4 hour and it came up and perfectly retested the 4 hour 50 EMA on the lower time frame. So this could have been your opportunity to actually scale in on this huge sell-off. Because most people, when looking at this, they would have thought, I can't get in on this, it's moving too quickly. But in actual fact, if you use these techniques that I'm teaching you, there's opportunities to get in on these trades. Now, actually, this was probably a little mini fib as well from the recent swing point green candle to here. Let me just apply my fib back to the 50 because the gold really likes the 50. You can actually see it's actually the 50%, and it was around psychological number of 1300. There you go. I've really picked out 3 confluences to short this. 1300, retest of the 4 hour 50 EMA on the hourly, and you've also got the 50% too. But if you were on the 4 hour, let's just come out on this. You wouldn't have even seen this. It just looked like a big, huge sell-off. So this works really well. Now another example of this is here with oil. Now obviously I've already broken down oil in the market breakdown. What's interesting about this is that you would have seen in the market breakdown, I think price was maybe around here, and it actually did come down to fulfill. Look, let me just remove this just to show you guys, because I know you probably would have watched that video. It actually did come down to fulfill minus 27% perfectly around 6.1, which is what I anticipated for this particular trade. But at that point in time when I was doing the video, price was here. So just for your information, it did come down to there. This is a beautiful, beautiful trade. Retest the trend line, 61.8%. Let's just tighten this up. 61.8%, 4-hour 50 EMA. Retest of ascending trend line. Market structure here. And then what's now happened here is price has now stopped, and we can do it all over again. So it'll be interesting to see if this happens. We've got price has stopped. It's allowed us to draw a fib. We've got the 50% here at previous market structure. We've got a descending trend line here, which then lines up with the third touch of the 50%. And then we've got this 50 EMA on the 4-hour, which by the time price gets up to here, hopefully it will touch this EMA. So this is me kind of going off a little bit on a tangent, but I'm going to show this moving average strategy. But I thought I'd show you this as well, because this is another great example. We've got the 50%, third touch for trend line, 4-hour 50 EMA, previous market structure. That's 4 confidences to take this short when it gets here. We're identifying this on the 4-hour time frame, so therefore when it approaches here, we'd go down to the hourly to look for rejections. Now it might not go up there, it might not even get there, and that's okay. But what we're doing is we're defining areas of interest. So what you can see here with this, you can see in the market breakdown of all these sell-offs that I put in. So just watch that video first. But what happened here is that when price broke the 4-hour 50 EMA, you can see how it works really well as a retest. So if you mark this here, look, you can see how well it retests. So generally speaking, when it closes and breaks the 4-hour 50 EMA, it's a very bearish sign. If price is always above the 4-hour, the daily 50 EMA, I treat it as a very bullish signal. But the moment the 4-hour closes below, for me, it's like, yeah, this is definitely going to break. So therefore, what you could have done is mark this, and then you got this retest. Now, in addition to that, let me just tighten this up a little bit. If we go down to the 15-minute, I think I showed you this, guys, on the other market breakdown. In addition to that, you also had this, a 15-minute fib, which touched the 78.6, and it touched the 15-minute 50 EMA, and then it provided you with a bearish engulfing candlestick. So that was a really, really little great trade there, which was first originally signaled from the 4-hour 50 EMA break, and then that would have allowed you then to instantly scan in, look for the retest of the 4-hour 50 EMA, apply a little 15-minute fib. So the moving average works really great as dynamic support and resistance. It works really well at picking out which fib level you think it's going to go to. So, for example, I can tell by just looking at this, so bear with me just a sec. If I fib this, I can tell by looking at this that price is not going to go to the 61.8 or the 78.6. Why? How do I know that? Well, it's because the 4-hour EMA has already pierced through the 78.6, and now by the time price gets up here, price probably would have pierced through the 61.8 too. So that basically means that for price to go up to the 61.8 and the 78.6, it would actually have to physically break through the 4-hour 50 EMA. And like I just said, when it's above the 4-hour 50 EMA, it then becomes bullish. So therefore, I can use the EMA as a signal to show me as future price which fib ratio price is likely to go to, just simply by looking at the EMA, if that makes sense. So it's a really, really, really powerful tool. It works in multiple different ways. And breaks, retest, dynamic support, resistance, and it can use you as a measuring tool to tell you what your the likeliness is of which fib you're going to come to. So I hope that's been helpful to you guys, and this is just literally a quick video on how you can use this moving average in different ways.